What is Dow theory and how does it help us understand our current bear market?
Charles Dow was the original editor of the Wall Street Journal. This goes back to the 1880s, 1890s. And he had all of these observations about market dynamics and behaviors of people and of prices within the stocks that were listed on the Dow Jones Industrial Average and all the various indexes which he created. So we have the industrials, we have the utilities, we have things like that we take for granted. Well, Charles Dow was the guy who started all that. Dow theory is something that he sort of postulated, just various things that were in the Wall Street Journal for years and years. And then he had sort of proteges that came after him. Robert Rea, another gentleman by the name of Hamilton, and then in a more recent iteration, Richard Russell. These are people who took that set of ideas and analyzed the market. And so if I gave like just a thumbnail sketch of maybe the most important aspect of Dow theory, it is that there are big movements in the market and there's little movements in the market. And the big movements are like the tide coming in and the tide going out. And these are your big market moves, bear markets and bull markets. Within the context of the tide moving in, the tide moving out, you've got the waves crashing on the seashore, right? So these are your small cyclical moves within the market. And it's always important to distinguish what's happening in terms of a behavior. Is this short-term cyclical or is it longer term, and is it more of a secular trend? So the long-term bear market, long-term bull market. And that's what he was sort of trying to document in the Wall Street Journal. So it's a helpful frame. Well, if you wanted to translate that into the current market context, he would say that there's three phases to a bear market. The first phase is when your investors say, oh my goodness, I've paid too much, and it was on high hopes that really were unreasonable. Those were inflated prices that were being asked. They were completely unjustified. I'm in an uh-oh situation, right? So you see your first decline because people overpaid and they finally recognized they overpaid. The second phase of a bear market, which is I think what we're heading into now, has to do with seeing that stock valuations are moving lower because earnings are falling. So a business cycle slowing down or moving towards a recession, these are things that have an impact on business productivity, business profitability and earnings, and that ultimately factors into price. The third phase of a bear market is when you have required selling, where somebody's like, I got to raise money. I've got to sell anything I can sell just to get a little capital, to get a little cash in the account. And that kind of panic selling is a dynamic that you see in the third and final phase of a bear market. Good news, bad news. We've gotten through a healthy segment of a bear market. That's the good news. The bad news is we've got two more ahead, and that's going to be really interesting as we head into 2023.